So there's a particular way to trade the strategy, and the way I trade it, it might look like I'm doing some magic and some stuff, but it's just because I'm still following the structure, right? So the trading, the style of supply and demand has a particular structure that needs to be followed, right? It has a structure. So if you're not taking that structure, you're only just playing any demand or supply that you see and just doing anything you think is right? If that makes sense. That's why most of you, some of you rather, actually get it wrong sometimes because you're literally just playing anywhere you think is right? Forgetting what's happening on the daily, the weekly, and the monthly most times. But you just go into the fractals and then get soaked inside the fractals because you can't come out of it. But when you understand, firstly, that the main thing that controls the market is the higher time frame. That's the first thing you want to know, right? The higher time frame. Now, in the higher time frame, there are major areas of supply and demand going on in the higher time frame. Now, your job is to first of all find the major players of the market, which is the major supply and demand. Firstly, right? That's the first thing you want to do. The major supply and demand. Let me use a pair, for example. Pair that's not here. I saw someone mark out NZUSD, so I'll just use that as an example. And then you now start to see the way I mark up the pair. Right? I'm going to show you how I mark up a pair and then tell you how I would have traded it this week. Alright? And then show you how I would have traded it this week. So I'll clean everything up. And let's start again. And I'll show you what I would have done basically. Right? So this is NZUSD. Now, I start off from the higher time frame. Firstly, so I can know where I am on the chart. Am I high or am I low? Right? You have to ask yourself these questions when you get started in trading. When you want to mark up your charts, the first thing you ask yourself is, where am I in the playing field? Right? Remember, your playing field is from the control supply to control demand. Right? So when you want to figure out, the first thing you want to find out is, where am I on my playing field? Am I high in the playing field or am I low in the playing field? If you're high in the playing field, you know that you should be looking for sells. Now, that's when your price left your supply area. Then if you're low, you know you're looking for buys. And that's just looking at the higher time frame, first of all. So let's find out our major supply and major control areas of NZUSD. Alright? So first of all, let's find out our demand. You see price come in here. So when you look to the left, let's find if you can see where price is mitigated. I think that's the lowest. Okay. So price mitigated somewhere around here. Alright. So on the monthly time frame, we have our rally base rally. Since I've seen the price has reacted off it, I would reduce it to opening price. As well, I'll reduce my proximal line. Alright. So most times, in most cases, the reason why I have to reduce my line towards the proximal is because this week, this rally candle closed it up. I also mix part of the week. So for me, the week isn't actually relevant, but they're coming for the opening and closing price in the base, right? So those times, that's when you see me reduce it. Now, seeing this, price is headed to supply, right? So there's no supply here, neither is there any supply here or here. The only way I can see is there's a rally, there's a base, and there's a drop. Right, there's a rally, there's a base, and there's a drop. This is a drop, base, drop as well. And when you look to the left again, there's a drop, base, drop. So I prefer this one, and the reason why I prefer this than this, and the reason why is strength. Alright, the strength and quality of drop is drop. Like even higher ones, but for how do I put it? for where we're headed, because I think if we're looking at it on the monthly, we're headed, if possible, all the way even up here, right? All the way even up here. But let's get started in the very first one that has a lot of strength and quality. Now, when I say strength, we've got all of this demand in here, right? All these buys are all demand in the market. Now, for price to break out demand, right? For price to break out demand, look at what price does. You have all of these demand levels here, right? Now, for price to break out demand, price breaks it with a drop, right? It breaks it with a drop, telling you that supply has taken power here. So the reason why you have a pullback is to get in, to recognize the strength of supply in the base. And that's why there's a drop, right? That's how you analyze your stuff. So that's how you analyze strength, basically. You want to see where supply has gained more power, and you want to see how price has acted in there, right? So now looking at this, right, it now shows me a lot more that this is my contributed supply, because since then, price reacted and fell all the way back to the mark. So that's where price is headed in the long run, right? So looking at this, I know that I've not gotten to supply yet. So all I need to do is still taking buys, all right? Still taking buys, because why? Demand has not finished. Demand is still going on, all right? Does that make sense? Is anyone getting what I'm saying? All right, great. So that's what tells you that price is not done yet of to sell. Like, it hasn't gotten to any major supply area for it to start selling to the downside. There's nothing telling it to sell until it gets to the main place to start off to sell from. So this is the major supply, and as you can see, this is also the major demand. All right, so we are headed to the upside. So like I said, I'm going to show you how I would go into a trade from the start of the week. So let's just take note of that area as our main supply area. All right, I believe that if I could actually reduce it as well, since it's still in the same zone, just for the purpose of reducing risk, I would have something like this as well. This is more like a replica. What we have on the monthly, where you have a drop, this drop, also take out pivot points, and then you see the reactions as well to drop price down. All right, so buys is a daily. All right, rejection. Also look at that on the daily time frame. Reactions, and then price drops. Price also reacted of this drop, I think, and then drop. So we have that area as our supply. Then I know that I'm looking for buys as I move on to the upside. So the psychology of supply and demand, right? That's where psychology comes in. Now the psychologist tells you that you know fully well the price goes from supply to demand. So you just have to trust it. All right. Trust the movement. Trust it. Now, you trusting that price is still going to get all the way up here, it's going to do you a lot of good. All right. Trust it. So do not feel like, price is here, it's going to drop again and maybe fall to the downside and all of this stuff. Because why? Price can fall all the way down here back because it hasn't mitigated a major supply area for it to sell all the way back down. So what it's going to do is keep on it's going to make pullbacks to find more demand that it's made up all on its way, right? The pullbacks are going to be as a result of the supply here, and then it's going to continue from a demand, right? It's going to continue from a demand body to keep on pushing up. Okay, now that's what happens on your lower time frames. That's what happens in your lower time frame. So I'm saying, when I say lower time frame, I'm saying your 4 hour, your 2 hour, your 1 hour charts, right? That's where all of these pullbacks are happening. So the market opened up for the week around, let me just look around there, 19th, 21st. So open up the week here. And ever since we opened up the week, we've been bullish. Alright. So let's see if we opened up the week from a demand zone. Alright. That's the next thing I want to see. Did we open up the week to start going bullish from the demand zone? So what we have here is a drop, base, rally, taking out supply. Alright. Understand this again. That's how you find strength. Look at this area here. You have a rally, base, drop, isn't it? This is a rally, base, drop. Now, what price does is actually mitigate the base right here, drops down, but recognizes the power of demand around here, right? Which I'm going to show you guys. I feel like there's a lower time frame demand area there. So it has mitigated that area and then broken up the supply, all right? Because this is a supply body. Now, what has price done? Price has broken up the supply body, and that's what shows you strength of demand in the market. Now, since there's strength of demand in the market here, check what happens. Price finds that strength and does what? Goes bullish again. So that's why it has come back there, and anytime it comes back into the zone, what happens? It finds much more strength, recognizes much more strength, and goes bullish. Alright? So now, what you're looking at now is the base. Right? This is now a drop base rally. So what you're looking at now is that base in itself. Alright, so you have that base. Now again, remember I said that when you're looking here on the smart time frames, you're going to see a demand body. So let's find out exactly what I was looking for. Alright, exactly that. You got a rally, base, rally. And that's why you have this pullback into that zone to respect the demand here. And then what does it do? It goes bullish. Alright, so that's how you try and make your way down into the time frames and kind of understand where price is headed. Alright, so when you see me mark up, I don't actually do magic, but I understand exactly what's going on because I follow my way. I walk my way from higher time frame, understanding exactly what's going on with candlesticks, and then drop it all the way back down. Alright, I drop it from daily, go to the 4-hour, go to the 2-hour, go to the 1-hour, all until I'm ready to get into an entry. Right, because right now I've not started getting into an entry, isn't it? So up until I'm ready to get into an entry, then that's where I now go into the smallest of time frames, 5 minute or 3 minute. I look for a break of structure and then reduce my risk and increase my reward. Right? So now I know that this is my pullback area for demand. Right? And as you can see, what's been happening. So the start of the week, price has gone bullish. Right? And I'll get to that how you can go into the buy. And then I'm going to break down this buy entry for you guys. Right? So now I know that this is my demand area. And you see, that also blocks my eyes from actually thinking about all that's going on here. Because if I start doing that, I'm going to see demand here. I'm going to see demand here. I'm going to see demand here. Demand here. I start seeing so many areas that could play off demand. You know why? Because you are not following price the way it's moving. Right? You're not following current price, basically. And market does what? Market follows current price. Market will not just go and start looking for demand all the way back down before it keeps on pushing up. Right? Remember, it's only making pullbacks as it goes to the upside. So you're meant to do what? Taking more buys. Right? Yeah, it hasn't broken that demand yet, so don't worry about exactly. Right? Because this is still a demand that stands. Right? This demand is still holding price up. So that's why you have to check in buys in here. The only reason why this now gets invalid is when it now breaks through, and then you know that okay, price is now maybe looking for a reward demand area or some sort. Right, but for now, we're headed bullish. So from the start of the week here, looking around here, what I'll be looking for will be a break of structure. Right? So go to the 5 minutes this time. So this is where it happened. Alright, you have that nice gap into there. Now, on the smaller time frames, take it that around here, there's still a candlestick, right? Just For example, just understand there's a candlestick here because there actually is. It's not really a gap, it's just a candlestick you can't see, but the banks know that there's a candlestick there. Just take for example, there's a bearish candlestick in there. So what do I tell you guys about a break of structure? Alright, can someone tell me that key for break of structure? What do I look for the break of structure from my demand or supply area? What am I looking for? Exactly, M's or W's. Now, we see our W here, isn't it? This is a drop. This is a high. This is a low. And what happens? Price breaks it. That's a W. Right? Now, what I mean by W's is when price drops and makes a pullback, right? And then drops again. What happens? You know that around here, there's a sell. There's a supply holding, pushing price down to the downside. There's a supply level right there, pushing price to the downside, right? That's what the concept of W is. So there's a controlling supply area here, pushing price to the downside. Now, price has to show me that it has broken supply around there for me to understand that demand has now gained control, right? There's a supply area there. Look at this, like it's very self-explanatory, right? What you have is a rally base drop, right? That's what you have there, a rally base drop. Now I want to see a demand body take that supply area out, and exactly what I see is a rally base rally taking out demand, and the rally candle in itself is what took out supply, right? So now all I'm waiting for is for price to give me an entry around here. That's my base, right? That's what I'm waiting for. Now, when price gets in there, I'm going to take in my buy, right? Does it make sense? When price gets in there, I'm looking to take into my buy because why? I've not done my W structure. I've gotten my demand level, showing the strength of demand, breaking out supply in there. Now I'm certain I had my confirmation already that that's a buy, right? Can you use chart lines? Yes, you can, right? But the candlesticks in itself will tell you a lot, right? You can't use charts, but candlesticks tell you a lot more, right? So now I know that that's where I'm getting my entry, and you see this exact thing is what price does, right? So looking at this and setting your limits, you have your limit entry right there, and stop loss just above, just below that area. How many pips is that, guys? That's a 3 pip risk, isn't it? That's a 3 pip risk. So in a 3 pip risk, I'm taking my trade where? Towards demand, towards supply rather, isn't it? Taking my trade towards supply. Now you see how much I'll be in profit right now. And what my risk for reward ratio would be, I'll be up about 1 to 40, 1 to 45. Right? So there's a way to take partials, and there's a way to ride your way up. Right? You might think that you don't have that how do I put it? You probably are not so sure, or you still do not trust your analysis. That's why you might have take profit areas or closing too early when you know that this could be your risk for reward potential, right? What's this? This is a 1 to 170 risk for reward, all right? A 1 to 170 risk for reward in this trade, and you're up about 1 to 40, right? So you're up about more than quarter of your risk for reward already in the trade. So doing that, you could have take profit areas, right? You have TP1s, TP2s, TP3 as you work your way up, and then you do what? You also, as you're working your way up, what you're doing as well is closing partials and then trying to see your entry areas to get into more buys, right? As you're taking your price up. So TP1, you're looking at supply areas. So how I do it is I also look at where supply has showed much more strength than demand in the past, right? So looking at this area, I've got this drop base rally, and then I see gets tested here, all right? You see gets tested here. So when it gets tested, what happens? It creates a supply body to break it out, right? You create supply to break it out. Now I'm still even on the 1 hour chart. Create supply to break it out. So I know that that's the base. Then I'm interested in taking price as TP1 right there. And TP1 has been hit. Alright. TP1 has been hit. And that's why, what do you guys see? That's a drop. That's a rally based drop. Now we see a rejection from the supply. Right. So TP1 has been hit. Right. So now I've taken partials. I could take maybe 25% off my initial buy. Alright. Take 25% off. How many pips is this? This is about 130 pips. Right. And in just 2 days. Right. In 2 days, got 130 pips. 1 to 45 risk reward on one pair, on one trade. Right. So I hit that in 2 days, and I'm taking partials. Now I can show you entries as you walk your way up. Right? As you walk your way up, show you entries that happen. So your entry opportunities, let's go back to the 5-minute, which is where the source really happens. So I'm showing you guys your entries, and now based on London Open, New York Open, and all of that, right? That's where you now start with your entries timing. So let's look for, let's fast forward to New York and London. That's 8 a.m. So 8 a.m. is around here. Alright? This was London Open right here. Perfect. Alright? So now, let's say all of this has not happened yet. Alright? Forget that all of this hasn't happened. And this is where we wake up in the morning for London Open, and then you're watching price. Now, take note of strength. Alright? Take note of strength. Strength of demand. That's what you're looking for, isn't it? For it to get into a buy. Strength of demand. Now, look at this area. You have your rally, base rally here, and you've also seen it get tested. Alright? It's been tested. And then it went up. And what happens? Price breaks out that area. Showing you that supply gains strength here. Right? Showing you that supply gains strength in the zone. Now, what happens around there? Price rejects off that supply area in here. Alright? There's a supply area in here. And you can see that on a smaller time frame. If you go maybe on 3 minutes. Alright, look at that. There's a drop-based drop in there. Alright. That's what broke demand in the very first place. Alright. That's what broke demand in the very first place. So, you see that price has been reacting around that zone. You see the rejections, right? Price reacted off the proximal, rejections, and then what happens? What happens? What do you guys see that happen? What happens? Someone tell me what you see. What happened? Strength, exactly. The strength of demand. Demand took back its strength. It broke up that supply area, showing you that it has collected the strength back. And what do you see? Break out demand, break out supply. What do you see? What's this? What's this? Again, it's not magic, right? Albria, exactly. That's his demand body. That's a rally, that's a base, and that's a rally. Taking out supply. So now, towards your timing, it looks perfect. Isn't it? Perfect. That's a rally, base, rally. Then, you simply wake up in the morning. Anywhere you want to set into your entry is fine. Even if you want to do on the proximal, it's fine. Just have your stop loss below. What's that? 3 pips again. That's 2.7. 2.7 pips. If you had it here, it would be less than a pip. It will be 2 pipettes. Right? If you did your stop loss, let's say to the close of the body of the candlestick, it would be about 1 pip. Alright? Anyway you wanted to put your entry is fine. Just set your limit, go to sleep. Alright? Because why? You've recognized strength yourself. That gives you a lot of confirmations that you need. Now, this is your re-entry to do what? To go to TP1. Isn't it? Now let's find TP1. What was that entry? Okay. So TP1 is right here, right? That's still 1 to what? What's the risk reward? 1 to 28, right? You had a 1 to 45, you had a 1 to 28. Okay, this is how many pips? This is 95 pips, right? On the first one, you had over 180. The next one, you have 95, right? And that's off London Open in the morning. So even if you miss this one, you'll catch the next one, right? How beautiful is it? How amazing is this, guys? It's all about trusting your analysis. That's where your trust comes in. Just trust it because you've seen your control and you've seen your major controlling areas. So all you need is your trust. Trust the strategy, trust the analysis, and just wait for price to do its thing, right? And you're good to go. That's just it. So one thing is, guys, don't just look for a demand area or a supply area anywhere in your charts. Make sure that whatever it is you're doing for your monthly and your weekly and your daily is alignment. Whatever it is you're doing on your 4 hour, your 2 hour, your 1 hour, even up until the 1 minute, right? Everything has to align. Everything has to fall in place and make sense. It's like a story because you know why? Everything that happens in the small time frame is what makes the higher time frame. All right. Everything that happens in the small time frame is what makes up the higher time frame. So the market is not going to do anything else. It's doing exactly what it needs to do. All right. So right now, I feel like price is still coming in for more demand areas, right? For more demand areas. Now that's not even your problem because now you've had your partial secured here, you've had another partial secured here, and you're good to go. All right. So you've secured 1 to 45, 1 to 28, right? That's about 70% in 2 days on your account. You've run your account by more than 70% in 2 days, right? On one trade, on one pair, on two trades, on one pair, right? So that's how to stick to it, right? So you don't get confused and you start looking for, oh God, where do I get my entries? How do I get in here? Oh, I'm gonna miss it. How do I do this? How do I do that? Follow price, right? When you see yourself making those decisions, those indecisions, follow price. Start off from the higher time frame and work your way down and make sure you see exactly what price is doing. Where is strength in the market? Where's the strength of demand in the higher time frame? In the 4 hour, where's the strength of demand on the 4 hour? Where's the strength of supply on the 4 hour? Where's the strength with your time zones for London Open, New York Open? Where's the price mitigated? Always make sure you find out these zones, right, when you're practicing, so it gives you a lot more idea and a lot more knowledge about what price is doing. All right, that way, trust me, guys, you're gonna bang out the strategy. Right, it's as easy as it is. Okay, so guys, that's the psychology that I just wanted to share with you guys. All right, I wanted to share with you guys that it all boils down to you trusting the process, trusting that this shit works, and then have a lot of patience to see that it hits your take profit, to see that it does exactly what you planned, right? How many pairs should I follow to start with? That's another thing, right? One thing you don't want to do as a trader is have a lot of pairs that you're trading with. Like I've taken note of really successful traders. Successful traders do not trade a lot of pairs, right? They do not trade a lot of pairs. Most of them trade 2, 3 pairs, 4 pairs maximum I've seen. I know someone who trades just 1 pair and is profitable, is a millionaire in trading, 6-figure trader in trading, right? Those traders, they do not trade a lot of pairs. You know why? Because trading a lot of pairs would take your eyes off sweet entries. You're going to miss a lot of trades when you're looking at a lot of pairs. Secondly, you're not going to understand the pair itself. You're not going to understand the time when the pairs really move well. Have you seen how the pair moves in London Open? Have you seen where the pair moves in New York Open? Have you seen how the pairs react at New York Stock Exchange Open? Do you know how the pair reacts at midnight? Like if I ask you a question, Do you know how the EU moves when it's 8 o'clock? Do you know what happens? Right? You might not know all of these things because you're not trading very specific pairs. And that's why you do not understand them personally. Right? Remember that trading is actually a personal and a private journey. So you want to have personal pairs to yourself. Pairs that you become a master for. Right? So stick to very, very few pairs. If you're trading Forex, pairs, have 2-3 pairs and be good at them. Right? Because trust me, guys, you only need just 1 or 2, 3 pairs for you to grow your account, basically. You can use just one pair and grow your account 100% in a week just by trading one pair. Check this out. This is just on NU. And NU, in 2 days, I've been able to grow my account by 70%. Right? So, just a very few pairs and you'll be good. Right? Right now, some people are even done for the week, basically, because 75% is enough for the week. For me, I look forward to 100% at the end of the week. And I've hit 75% on Tuesday. So I'm just looking for 25%. I'm just looking for a 1 to 25 risk for reward trade. And I'm done for the week on one pair. Right? That's just how it is when you actually speak to specific pairs. Do you have a funded account? No, I don't have a funded account. Alright, I don't have a funded account. So guys, have anyone got any questions regarding what I've talked about so far? Have anyone got any questions?
Yes, Derek.
Alright.
Just a quick one, because I know you've done your demand and supply zone and weekly zones.
Yeah.
How if you go on a daily, how do you deal with retracement? Let's say we know on a weekly, monthly we're bullish.
Yeah.
Then you wake up at 6 o'clock in the morning. Then the price just decided to go on a 2 days retracement. How do you pick that one up?
You have to, first of all, you have to walk away from the higher time frame. Alright. So you see how I started? I started off looking at my major supply and demand areas, and I saw that this was my demand, this was my supply. So I know that I had to look for more buys, right? That's the key. Your directional bias is your very first key to your trade. Your directional bias. So now I know that all I'm looking for is buy, right? So seeing that it's a buy, I then go into the smaller time frame. So I start off from the 4 hour, and I want to see. I see price reactions. And price is what? Reacting off a demand zone. This is all demand. This is all demand. Alright? So I know that there's a demand area that I have to look at. So then I have to look to the left and see the story. Now the story here tells me that there's a pullback. This is a rally, this drop, and then there's a drop, this rally. So that is a sign of strength of demand in there. A strong demand. Look at the quality of demand as well. And look at the strength demand. So that immediately tells me that look for buys around here. Alright? So when I know that I'm looking for buys around here, I go to 5 minute, look for a break of structure. As soon as I see that break of structure, I'm executing. Alright? That's just how it is. Okay? Down. Okay, another question. If a demand or supply zone has already been tested once, does it make the zone invalid? No, it doesn't make it invalid. It actually shows you that there's strength in there. That's a sign that that's valid zone. Right? It being tested once is a sign that it's valid. Right? Or there's no limit to how many times. Yeah, it being tested once shows that that's a valid demand zone. That's why price will get in there and then test it and push up. Right? That's a sign of demand. So guys, I'm wrapping up the call right now. And again, practice. Right? Practice. I'm actually going to give everyone on this call an exercise. Right? So I know that you guys are learning. So guys, I want to see everybody, every single person on the call, mark out AUD/USD and show me how they were taking in a trade since the start of the week. Alright, I want to see every single person mark out AUD/USD and show me how they are going into the trade from the start of the week, from entry to take profit. I want to see everything. Alright, so guys, that's my time, and God bless you guys. Alright.